Okay, guys, hello and welcome to the Minds of Money 5 at 5 show. This week we're sponsored by WA Kaolin, Kin Mining and Avalon Mining. And we're bringing this in association with the Resource Global Network. My name's Simon Carr. I represent Minds of Money in Western Australia and the Asia Pacific region. And welcome to 5 at 5. If you're attending 5 at 5 for the first time, the aim of 5 at 5 is 5 guests at 5 o'clock, in this case, Melbourne time. And it maintains engagement between investors, our investment community, and our mining community through an interactive format. It supplements our online Global Connect conferences that we organize, and it also helps to bridge the gap and keep people engaged as we move back towards physical events, as we are now doing with IMARC in October in Melbourne. Please have your videos switched on and please contribute with questions. Any questions you have, please submit them via the chat function. We've got a great lineup of guests today. We've got Dan Porter, Portfolio Manager for Resources for Pure Asset Management. We've got Alberto Migliucci, Chief Executive Officer and Founder of Petra Commodities. Andrew Sorensen, Chief Executive Officer of WA Kaolin. Andrew Munckton, Managing Director of Kin Mining. And Pierre-Yves Rigaux, Chief Executive Officer of Avalon Mining. So we're going to start off, I think, with the news stories of the week and just hot topics out there within the mining industry at the moment. And if I may, I'd like to turn first to Dan Porter. Dan has an extensive career. He's worked for UBS, Nomura Securities, Wilson's and Merrill Lynch, as well as working with the Australian government. He now works for Pure Asset Management. And I'd like to ask him, what news story in mining has caught your eye this week, Dan?
Yeah, thanks, Simon, and afternoon or good morning to everyone out there as well. Thanks for jumping on. I think something that's been very topical in mining circles of late, but perhaps of more note this week. There was an article in their Financial Review on Tuesday morning, and it involved an interview with Kevin Gallagher, the CEO of Santos. Now, we've had the APA conference taking place this week over in Perth, and that's got all of the oil and gas community all excited over there, which is not a bad thing. Not strictly conventional mining of dirt, but anyway, we still enjoy our comrades in the oil and gas space. But in that article, it was talking at a government level as well, and particularly with the resources minister, the federal resources minister, and just talking about the lack of capital available for developing medium and larger projects in Australia, and concerns around ESG, obviously very big, but I think a lot of that is potentially lost on some investors, just given the changes that are taking place in investment markets. But we're not seeing the same changes take place in our use of these commodities in our everyday lives. And this is what the article was suggesting, is that if we're going to have a gas-led recovery in Australia, or certainly use gas as a transition fuel from an energy perspective, then we are going to need some big projects to be developed in this country, and it's less likely that those bigger projects will come online, given the difficulties in financing them, whether it be local lenders, and certainly a lot of the big four banks have completely pulled out of the mining space. And even this week, we've heard about NAB putting on oil and gas projects under review. So we're suspecting that they'll be walking away from that sector reasonably soon as well. So from that perspective, a bit of a misnomer and a real dilemma from an Australian funding perspective. And that's something that we definitely look at in terms of pure asset management as well, being more of a credit-focused fund and looking at getting projects up into the production phase. That's certainly an issue that we come across every day. But it's interesting to note that even the bigger companies, and a multi-billion-dollar company like Santos is facing those difficulties as well. Now, I think what that will ultimately end up looking like is a bit of government intervention. I think in that perspective, I think it is going to be necessary, just given the larger funding pools are moving away from the sector on a sort of weekly, monthly basis. But certainly very topical, given the run in commodity prices that we've seen lately, the amount of exploration that we've seen go into the ground. You do have to start to question where that ends for the sector as a whole. So a little bit of alarm bells from our perspective. I think from an investor perspective as well, that does provide some opportunities.
Okay. Well, that's very interesting. Could I just ask you specifically about yourselves at Pure Asset? How do you go about identifying, the growth opportunities in the mining industry that you're interested in?
Yeah, no, it's an excellent question. Being a debt-focused fund and looking at more and companies that are coming up into the production space as well, we are looking to fund projects, and so it's very deal-based from our perspective. We're not so much a sort of a macro feel to it. It's more about what project is in front of us and is it viable, and does it provide a decent return for our investors as well. Now, that being said, it does pay for us to be sort of commodity or very well aware of the commodity cycles, and looking at where the next commodity cycle is coming as well. So whether it be a case of, is a particular commodity going to be the next big thing, or is it starting to have a run in its price? Or what we're seeing a lot lately, Simon, is a big shift in global supply chains. And that's really promoting a lot of commodities that we hadn't really thought of before, some of the more industrial type commodities. But a lot of them are coming out of China, and a lot of governments around the world and businesses as well have made it their intention over the next few years to shift that supply chain away from being so dependent on China and come up with their own production. Sorry, had a light turn off here. Sorry.
No worries.
Terribly sorry. We're back on. Where was I? We've seen a lot of push into that industrial metal space lately, and it's not so much commodity price driven or macro driven. It's really that policy change that we're seeing, and that's creating a big shift in our part of the world. But also, we're a commodity agnostic firm as well. So, we will look at, fossil fuel based projects as long as they stack up. And as long as the ESG issues are dealt with accordingly, and so we're seeing a lot of focus on that, or a lot of inbound focus from that part of the market as well, as those funding sources dry up. But nonetheless, those products are in huge demand, and we can see that in things like thermal coal that's hit $120 today, and certainly good runs in oil and gas prices as well.
Brilliant. Thanks very much for that. That's brilliant and valuable insight, Dan. Thanks very much. Just going to move on next to Alberto Migliucci. Alberto is the founder and CEO of Petra Commodities in Asia. It's a boutique investment advisory firm that specializes in natural resources. Alberto is a senior investment banker with 25 years of experience. He was previously at Credit Suisse, Standard Bank, Societe Generale, and the Sumitomo Bank of Japan. What news story have you picked for us, Alberto?
Well, thanks, Simon, and thank you, everyone. I'll just put that up to share that. All right. So, first of all, thanks to our sponsors, Avalon Mining, Pierre-Yves, my good friend, Kin Mining, and WA Kaolin. Interested in hearing your talks later. Thanks, Dan, and thanks to Mines and Money. Look, there's a lot going on in the market, but I thought something that can actually move the needle is, obviously Dan sort of mentioned this about the lack of capital in the market, at the APIA conference here in Australia. And as an investment bank, I'm always looking at different ways on how to raise capital and novel ideas, novel structures. What are the game changers that can make the needle move for our industry, and what the trends are. And I thought one trend that you may have heard of in definitely the last 12 months is these things called SPACs, which stand for Special Purpose Acquisition Companies. And basically, in layman's terms, they're actually a blank shell company or blank check companies. Look, the interesting thing about a SPAC is they actually raise money in a shell and list it. And it's kind of rare to have a company with a lot of money in it and no business, no asset. So it's kind of a reverse spin on the conventional IPO, where you raise money before you actually develop a business. Usually it's the other way around. You've got a company, you've got a mine, you need money and you raise capital and off you go and you list it. Whereas this is opposite. So, and I think this is a function of a lot of lazy balance sheets sitting on the sideline waiting for opportunities. So SPACs have been around for since the 90s, but they've just come and gone at certain levels. And there's a lot of money on the sideline. And so you can see here from this financial post, a steel company is potentially raising money for $1 billion. I won't go into too much details here in terms of how the SPAC goes, but basically you have the SPAC sponsors and the public investors. So they raise money. That listed SPAC you'll see on the left-hand side of your screen is a shell company, and then they find a target. And once they got the target, they kind of do a classic in M&As, in investment banking speak, a classic merger or acquisition, and it results in the listed resulting issuer. Some of the benefits of SPACs are they can move much quicker than an IPO, because an IPO you actually have to write a prospectus on the asset and do a lot of due diligence. Whereas here you got no prospectus to write except to say you've got $1 billion in a bank account and here's our management and this is what we're looking at. So you kind of bypass all of that. But there's some issues with that which I'll touch later. But basically, you'll see SPACs. They're very big now on the New York Stock Exchange, moving on to the SGX. I'll go to the next slide. So the target business focus. So some SPACs focus on acquiring a target in a particular industry. So it could be mining or could be just general. So there's no real rule to what a SPAC looks for, but it obviously depends a lot on the experience and reputation of the management in that SPAC. Now, SPACs, a couple of SPACs that have happened in the last 6 months are mega SPACs, mainly in like there was a sports betting firm called DraftKings, a space tourism company, mortgage lenders, and all these valuations have come into billions of dollars. And so, Simon, in terms of commodity-focused SPACs, you may have read that Robert Friedland, Singapore SPAC called Ivan Capital, he's raising $220 million. Now, there's a few guys that I've listed here on this page that are raising quite a lot of money, and they're all most of them are focused on, and I'll go on the trend, is the electric vehicle green energy. These tend to be especially hot areas. So you see Friedland's vehicle raising $240 million through a SPAC, and their focus is battery-related metals. Mick Davies of Xstrata Reputation is also putting together a SPAC with a couple of investors in the US, and they're also focusing on EVs and other green energy technologies. So Daniel, I can't see too much upstream oil and gas there, but hopefully there's probably some around. There's another company called Deep Green, $2.9 billion, and they're an EV battery metals maker. Also, it's the Chinese are getting bigger into it. CITIC, the Chinese state investment management company, has raised $240 million, listed a SPAC on the US on the New York Stock Exchange for $240 million. And again, they look for energy efficiency, clean technology, and sustainable sectors. They're not all about green, but there are some other SPACs that I put Africa Gold. So those guys have raised $360 million to go out to look for gold assets. So they're Pierre-Yves, if you've got a good gold asset in Mongolia, they've probably got the cash.
I'll be on my way.
And so, a couple of interesting things here, and this will be my summary slide, is you've got the money and you've got the smart management, and then off you go and find something. And it's not as easy as people think. So a couple of things are, back to how weird. At first, I thought, when I looked at the SPACs, did some due diligence, I thought the SPACs were due to monetary policy distortions in the market, the COVID pandemic, some Trump things, some Biden things. But it's actually the fear of missing out from a lot of the US-based investors. So what I think is driving this SPAC trend is a lot of the investors, including probably a lot of people on this call, they have the famous FOMO. So the fear of missing out. There's this, what's the next Facebook? What's the next Uber? What's the next battery technology? Whether it's kaolin or manganese or copper. So I think there's a lot of that money trying to shoehorn and fit into these SPAC vehicles. They've been so hot, I can't overestimate how hot these SPACs have been in the last 12 months. I've got some numbers there. But what we're seeing, because they've been up and come up like mushrooms, basically, now the SEC and the regulation is tightening up a bit, because there was a bit of loose regulation around that. So you can imagine there's some more scrutiny. So there's a bit of slight cooling off in terms of what you can do, can't do SPACs. But as an example, down there, in 2019, there were 59 SPAC IPOs raising $13.6 billion. So 59 in 2019. By last year, it jumped from 59 to 248. It's about 5 times more, and raising a total of $83 billion. So 4 times as much. And in this quarter alone, from January to March this year, so just this quarter, there's been 325 SPACs raising over $1 billion. Now that number is mind-boggling. So that's my news item, not probably only of the week, but probably of the year. So just alone, just put it in perspective, there's $100 billion out there looking for a home, right? And these guys, and this is where it comes to the crunch. There's 260 SPAC blank check companies with just money and nothing else, sitting on $87 billion of cash at the moment, that are going to be facing deadlines within the next year to year and a half. This is one of your points earlier, Simon. And that's crazy, because I've actually worked on SPACs before, when they were hot back in 2010 and 12, when I was at Credit Suisse. And you literally have $800 million and you're actually told to go and find an asset. And it's not as easy as you think. So this is the point of this whole few slides, is in 12 months' time, there's going to be a lot of crazy deals going. Because as a SPAC sponsor, you spend a lot of money doing all the due diligence, doing the IPO, all the admin costs and the legal costs to get it set up a SPAC, and there's some costs involved. And you've got the management team that's been working for you for a year. So you've got all these costs and you've got nothing to show for it. And guess what? The way the SPACs are structured, typically, if you don't use it, you lose it. So if in 18 months, you've got a $1 billion SPAC and you haven't found the vehicle, you've got to return the money to investors. And that's not a good option, because you return $1 billion minus your cost for the last 12 months and opportunity costs and time costs and all the legal costs and admin costs. So you're going to return $1 billion minus X, which is not a good look. So what happens if you're an owner of a SPAC or a sponsor SPAC? You're going to be forced to find an asset. So watch this space. There'll be a lot of crazy deals done. Now, I'm focused on mining, but a lot of it's obviously a lot of the tech space. What's the next, like I said, what's the next Airbnb of the world? A lot of these, unicorns, as they call them. But I can see there's going to be a lot of crazy money going to crazy deals. And I've seen that playbook before in 2010 and 12. So I guess it depends on which side of the equation you're on. If you've got an average asset and you want to spin it off into a SPAC and you tell a good story, why not? But you be careful if you're an investor in that SPAC, because sometimes, as I said, they're trying to make something fit, a square peg in a round hole type situation.
Well, that's really interesting. It's great to hear about something new and something that perhaps a lot of people haven't really heard as much about before. So thanks very much for that. Thanks also for sharing some of those commodity examples. What's good for Robert Friedland, good for the rest of us, I suppose. And battery minerals, watch this space as far as SPACs are concerned. Thanks, Alberto. On the notes, we've got a kaolin project next. So since acquiring its world-class kaolin resource from Rio Tinto in 1999, WA Kaolin's co-founders and owners have invested over $42 million to develop and progress the Wickerpin kaolin project. Through extensive R&D of products and processes, the company has spent significant time and funds optimizing its proprietary dry processing method to build and extend on its success as a kaolin producer and exporter to global markets. Having listed on the ASX late in 2020, WA Kaolin is on track to production by the end of 2021 through its ongoing stage 1 build of its processing plant, which will produce over 200,000 tonnes per annum. And to tell us more, we have their Managing Director, Mr. Andrew Sorensen.
Hi, Simon. And hello, everyone on the call. I'd just like to introduce our company right now and go through a quick presentation, if I may. I'd like to tell you a little bit about our project. It's a kaolin mine that's based in Wickerpin. And as you can see on the screen here, Wickerpin is about 200 kilometres southeast of Perth and has good access to ports in Perth, Bunbury and Esperance. We have also an existing plant that's operating in Perth, and we built this plant to prove out the concept, pilot the process, and continue market development activities, exporting products around the world. The good thing about the Wickerpin project, it was discovered originally by Rio Tinto in the 1990s, and the particular area was picked because it had very good access to all of the necessary infrastructure, power, water, road, town, and those ports that I mentioned before. Within our tenements, you can see the tenement map there in the yellow background. The green area is our current mining tenement. We have 109 million tonnes of kaolinised granite in there. And those grey areas that you see are retention tenements. That's a further 500 million tonnes of kaolin in there. And when the area of all of those tenements added up is about 10,000 hectares. Kaolin mining is a very low-tech mining operation, if you will. We have about 5 odd metres of overburden, and then the material is spread laterally in a thickness of between 15 and 35 metres. So it's a very simple strip mining operation and low cost. Enough about the generalities. As Simon mentioned, we've raised some money on the ASX, and we've started building our plant at the mine site. And the image that you see on the right-hand side there is the actual building. I took this photo with the drone about a week ago on a nice day out there at Wickerpin. And things are going very well for us. We progressing very well with the building. It's almost complete. We've just got a little bit of siding to put on and a couple of doors, and all the concrete is finished. The drainage is finished, and we're now started to install equipment inside the building. I'm very happy to say that we're on track for timing for production at the end of this year, and the budget is on track as well. Again, a few more pictures. That's our resource on an open day that we had there. You can see it's a very bright white kaolin with the overburden you can see on the top bench, and then the next 4 benches are all the material. We're down to about 17 metres in this particular location at the moment, and as we extend to the north, we'll continue to go down to about 30 metres. So we're about halfway in to the resource depth here. Our process that's going to be housed in this building is the K99 process. It's a dry process of kaolin that produces a very good kaolin at a very good cost. The reason that the dry process works with our resources, it's a very pure resource, and therefore we don't have to use any bleaching chemicals or high Gauss magnetic separation to bring out the impurities. Our resource is a primary resource, which is weathered in place and therefore has a very low level of impurities. I think it's important to note that as an existing producer, we're producing small volumes, but still consistent volumes and selling them into the market. So we have a very strong market presence, having been around since 1999 and seriously in the marketplace since 2006. I think it's a very good opportunity for anybody on the call who wants to ask questions about our progress, or if they want to inquire a little bit about what kaolin is used for, and if it has any relations to that exciting area of EV and the new economy of electric vehicles.
Yeah, so we're keen to encourage questions. You can put your hand up if you'd like to ask a question. You can also post a question on the chat section there. I guess that is a really good point that you raised, though. What is kaolin? What is it used for, and who do you sell it to?
Oh, well, our existing customers are a mix of in a mix of industries. I guess there is the ceramic industry that uses kaolin for tableware, for ceramic tiles and sanitary ware like baths, toilets, and the like. It also goes into coating applications, paints, goes into polymers as a filler, rubber as a filler, and of course into paper. There's a very large sector of the market in paper. And then you've got the smaller applications like cosmetics, face masks and the like. We have quite a high volume of those customers simply because of the very pure resource that we have and the fact that we don't use any chemicals. So we can tick the boxes on all of those requirements for the natural cosmetics industry. Then it goes into pharmaceuticals, goes into agriculture, animal feeds. So yes, a very broad range of applications, and that breadth of applications has led to a fairly stable price curve over time, because there's such a broad usage. We're not dependent on one particular industry, so we don't have that boom bust pricing cycle that you might see in some other commodity, industrial minerals.
Great, and there's a question that's come through from George Petka, and he's asking, are there any other deposits, any other commodities as part of that deposit over there that you're mining?
Yeah, so we've got a very little bit of gravel on the top, which the local shire is very interested in for their roads, but that's just a by the by. The kaolin itself is co-located with quartz, so we remove the quartz and sell the kaolin. The quartz of itself is not a particularly high quality quartz in that it doesn't have ultra low iron levels, which sort of is what a silica sand needs to be of great value. So yes, we're not seeing any other saleable commodities within our resource.
Okay, and when are you planning to be in production, Andrew?
So we're on track for production in December this year. We're assembling the final, basically doing the electronics package, the small power package, the construction of the equipment, installation of the kiln, separators, baghouse, packaging equipment, and commissioning will commence in the third quarter of this year, of this calendar year, and then production by the end of December.
Superb. Well, good luck with that. I just want to come to Daniel again and ask Daniel if he's got any questions for Andrew.
Yeah, I do actually. Just given your sort of low strip ratio out there and the purity of your product, where do you think you'll sit on the cost curve for that kaolin mine?
Oh, well, definitely very low on the cost curve. When you look at kaolin, the production of kaolin, one of the most significant costs is actually logistics, because it's a fairly low value commodity. How efficiently you can get it from the source to the customer is vital. Hence the need for us to have very good networks to the ports and then infrastructure to the customers. So essentially, in terms of revenue, logistics is up to 40% of the of revenue.
And that distance to port doesn't pose any major issues or challenges, Andrew, or how is your cost base sitting from that perspective as well?
Yeah, no, we're in good shape because the kaolin, processed kaolin is a very dry, dusty material, so it doesn't lend itself to bulk shipping. So most of the kaolin that's shipped around the world is shipped in bulk bags and in containers. So we've got a very efficient model for getting the containers off the wharf out to our plant and back again. We've got 36-metre road access, which means we can ship 2 40-foot containers on the one truck all the way. It's about a 2.5-hour drive. So yeah, we're very well placed on the logistics front.
Yeah, great. And just finally from me, in terms of your product and what you're bringing to market, is that a major step change in the supply of kaolin globally, or is that is it just an incremental addition? And given your level on the cost curve, can you fight for market share with that product as well?
Yeah, well, that's interesting. The demand for kaolin is increasing and the supply is tightening, and there's a number of factors around the supply tightening. So there is a ready-made market for us there, and we've got a lot of pull from the market. Our marketing is there's a lot of it's been responsive because people hear about us and want access to the supply because they know that we've got a large resource. We've got JORC resource of 30 years, but in actual fact, with 500 million tonnes sitting there, it's hundreds of years in the long term. Yep. And the fact that it's a very pure resource as well means we've got a lot of demand for the product. In terms of percentage-wise, like at 200,000 tonnes, we'd represent less than 1% of the Asia Pacific market, and that's our target market. So there's plenty of room for us in the market.
Yep, great, thanks.
Brilliant, thank you, Andrew, and thanks, Daniel. We're going to have to move on now. There are some other questions, but we can perhaps pick those up. We'll send them through to you separately and you can engage those people direct. It's also worth noting that Andrew and WA Kaolin are part of our Minds of Money Online Connect Global Conference, 22nd to the 24th of June. And if you'd like to organise meetings with Andrew, I think he's still taking those meetings. And you can do that via the platform if you're an investor. So the next speaker is somebody who's very well known in WA, a highly experienced geologist. He's held senior management roles of numerous ASX listed companies, been very heavily involved in the gold space in a career spanning more than 30 years. And this is Mr. Munckton, who's now the Managing Director of Kin Mining. So I'd like to hand you over to Andrew.
Thanks, Simon. Thank you for the introduction and to Minds of Money and all the listeners out there. It's good to be here. This is my first time with Minds of Money, so I'm a bit of a guinea pig run for you guys today. So hopefully it works out all right. I'll just go on to the next slide. Thanks. So I always like to hit the corporate slide first, just to give people a bit of a feel for the company in general, if you haven't seen us before. So we're about a $100 million company, been listed for 7 or 8 years now, and we have a broad understanding and a broad experience in the base metals and gold industry across the board, not only with the board of directors, but also the management team. Some slightly unusual features of the shareholder base. So our 4 largest shareholders, who are very well known investors in the WA and the Australian resources industry, Those four collectively speak for 52% of the stock of kin. So there's only a relatively small proportion of the stock that gets traded. All of those four large shareholders have been with us for a number of years now, and they've been the dominant force in funding the company over this last 3 years while I've been with kin. Investors can see the share price graph there in the bottom right-hand corner. If I took that back another 6 months back to the middle of 2019, where we were sitting at 4 or 5 cents, the features here is that we rode up on the back of some good exploration numbers and some good exploration results, and a rising gold price up until about October, November last year. We've come back a little with the declining gold price, albeit that it's only a modest change over this last 4 or 5 months. And now we're starting to re-educate the investment community with some more exploration numbers, which have just started to flow out of the work that we've been doing over this last 3 or 4 months. So, my expectation is with a strong gold price, or even a flat gold price, that the exploration numbers that we're going to be putting out over this next 3 or 4 month period are going to drive the share price where it can get to. Next slide, please. The assets of the company. So we're in northeast of Leonora, 650 odd square kilometres of ground. It's a premium, tier 1 gold mining district. A number of very large producers, the Goldfields and the Sons of Gloria and the Thunderbox operations of Northern Star. So, it's a premium district to operate in. We're a relatively mature exploration company in that we have a bit over 1.2 million ounces in resource already. And the last 12 months we've spent chasing some new, larger, higher grade deposits. In the vast majority of the situations has been in the Mertondale and Cardinia areas, right at the centre of those concentric circles. So it's been a focused exploration program that's been yielding some solid results. So when we've been operating at Cardinia in this last 6 months, we've delivered 3 new discoveries, Cardinia Hill, East Lynn and Eagle Crow, which I'll touch on in a moment or two. And the latest phase of that exploration has delivered a new discovery at a project called Mount Flora, which is out to the east of the Cardinia project. Large amount of drilling going on right at the moment, and we have a pretty substantial program for the second half of the year. The phase 4 program, which is the one that's currently operating, has been very successful, and I'm looking for similar levels of success over the back half of this year. So my expectation is that there's going to be a strong news flow and further resource growth over this next 6 months. The overall aim here is to take the resource base from 1.2 million ounces to somewhere between 1.5 and 2 million ounces before we make a decision to mine and before we decide which way the best value for shareholders can be yielded. To give you an idea of what I think this looks like, the geological analogy for this is a project called Carosue Dam, which is about 150 k's from here. Carosue is owned by Northern Star. It's a $3 million ounce gold camp. It's been in operations for nearly 20 years, and it's doing about 200,000 ounces a year this year, maybe even push towards 220. So that's the scope, the frame of reference that I have of what this Cardinia project might look like in a few years' time. Next slide, please. This is a window into the Cardinia project, just to give people a bit of a feel for what we're dealing with here. The picture on the right-hand side is a magnetics picture. Its scale is about 10 kilometres north-south by about 6 kilometres east-west, so it's quite a large area. The coloured dots are obviously the drill holes, and you'll see that the majority of the resources sit at a project called Bruno Lewis, and albeit with some additional contributions to the resource base here of Allens East and Cardinia Hill. But the main focus has been on this area that's outlined with the black outline there, a thing that we're calling the Eastern Corridor. And that's the place where we've had 2 or 3 discoveries in this last 12 months. And we're covering the rest of the ground, which doesn't have very many drill holes on it, between Hobby and Triangle and Pelsart and Comedy King. You know, that sort of northern central part, that's all been covered with a large gravity survey, and gravity is now being the go-to technology for determining where the mineralisation is here. So it's quite a technologically advanced little group that we have here, but and that's delivering some pretty solid success with the drill bit over this area that we think contains several. Well, there's more than a dozen discoveries, a dozen deposits there now, but we're looking for these larger deposits within that whole area. Things that are northwards of 500,000 ounces in a single deposit. To give you an idea, Bruno Lewis is about 350,000 ounces at the moment. So that's the investment proposition from this area. We think it has great potential, and we're continuing to work our way through it. We had $12.5 million at the end of March. We've got a bit less than that, and we're working our way through that money with the exploration program. And Simon, happy to take any questions. I saw a couple of people pop their hands up during the preso.
Did they? So yeah, are there any? There's no questions on the chat. Are there anyone with their hand up at the moment?
Yeah.
Yeah, Alberto, please. Yeah, go ahead.
Hi, Andrew. Thanks for that. That's exciting. It seems like you've got so many mineralized trends here and sampling programs going on. It seems, and you've just had a recent drilling program which had some pretty good results come out from the Maiden area. Was it Mount Flora, I think? What's the main? I know you've touched on a lot of it. What's the main focus over the next 6 months? Because you've got the $10 million in the bank. Where's that going to be focused on? Because it does seem like, when I looked at that map, that's magnificent geology, but it seems like there's a lot of mineralized trends. So where's that main focus going to be over the next 6 to 12 months?
The main focus will be at the Cardinia project. Cardinia's got 600,000 ounces there now, and we're hoping to get that to circa 1 million ounces just at Cardinia. And that will be the trigger for us to be able to make a decision on how we monetize the assets that we have there. There'll be some work, a limited amount, on some of the outlying projects. You saw that outside the 50-kilometre concentric circle, we have some other tenure that we need to spend a little bit of money on, and there's some prospectivity on those for gold, and the Mount Flora discovery was one of those pieces of work. But the main focus is going to be at Cardinia to get it to a decision to mine, if you like.
Okay, good. Thanks.
Great stuff.
I just had a quick question for Andrew, if that's all right, Simon.
Yes, please.
Just given your resources that you've got to hand at the moment, Andrew, and what you're looking at developing in terms of that resource base over the coming year, have you had thoughts about moving that into production, or is that your role, or is that someone else's role, do you think, in terms of developing those assets going forward?
Well, second question first. That's my role. I see that as my role.
I don't mean yours specifically, but I mean the company itself. Yes.
Yes.
I'm sure you're safe. I'm sure you're safe, Andrew. Yeah.
The board's very focused on getting the project to a decision to mine, and so we're undertaking that process now.
Okay.
Sorry, just remind me the first part of the question again, Daniel.
Just given how many resources that you've got to hand already, has there been any? Are you trying to get to sort of that 2 to 3 million ounce level before you move to development phase, or is it or a certain length of mine life, or what are you looking for? Because I mean, your resource base there is pretty solid already. What's been the holdback from that perspective?
The trigger for me is between 1.5 and 2 million ounces, and there's a quality element that has to be factored into that. It's not just about the number of ounces that you have.
Yes,
and just so in full disclosure here, Daniel, Kin had a failed attempt at getting a project up and running previously, and so and that didn't end particularly well for Kin. And one of my functions of coming into the company was to put it back on the rails 3 years ago, and I think shareholders are reasonably happy with where we've gone in this last couple of years. So we'll continue on in that vein.
Yeah, cautious approach for now, but you'll get there eventually. Yep.
Yes.
Excellent. Thanks, Andrew. Appreciate that.
Thanks, guys. We are really pushed, unfortunately, for time, and so that's been another valuable session. We'll try and catch up with some questions at the end and keep it all within the hour if we can. So please keep the questions coming. If you've got any questions as well for our next speaker, that will be great. But thank you very much indeed, Andrew, and welcome to your first Minds and Money online event. We're looking forward to having you at IMARC in Melbourne as well at the end of October as an exhibitor. So the next speaker is Pierre-Yves Rigaux. He's the ex-CFO for Asia Pacific for Trafigura, a leading trading with a significant presence in Mongolia. He's the ex-CEO of Galena Asset and the head of mining and metals previously for BNP Paribas in Asia Pacific. So fantastic track record, obviously. He's now CEO of Avalon Mining, and he's going to tell you all about it. So welcome, Pierre.
Thank you, Simon, and hi to everyone. I'll introduce you Avalon Mining, which is a new private venture, which is focusing on basically near production assets. And we go through our main target as we speak, if you want to go into the next slide. Our primary target is really ETS. We have exclusivity to acquire 60% of the project. ETS will be the third largest mine in Mongolia with a annual production of 310,000 tons of copper and 5,000 tons of molybdenum. As you can see on this map, the project is very close to the border, to the Chinese border on the south of our project. So we are about 160 kilometers from Oyu-Tolgoi, which itself is very close to the border. As you may see on the map, you see a red line, which is a new built railway, which is connecting our future project to the network. So exports to China will be very straightforward. In terms of size of the project, I gave you an idea of the capacity, but in terms of mine life, we'll have a 15-year mine life. We are currently updating it with macro mines, and we will have over 210 million tons of copper to be produced. Next slide is really because I foresaw the question of Daniel around where we are on the cash cost curve. So here you go. And as I think every single miner will tell you, we are a very low cost producer, or we foresee we will be a very low cost producer, and that's based mostly on the fact that we are very close to China again, but also the fact we have a very low strip ratio, below 1. That mining costs in Mongolia are generally low, and cost of energy is, say, about a quarter of what you see in Mongolia. So it will be a very low cost producer, which will generate significant cash flows. We foresee an EBITDA at today's price around $300 to $350 million per annum, and an IR well above 20%. So that positions us well in the future. On the next slide, you will see that a bit of history about the project. So the project was developed back in, so the resources were done in 2000, but the BFS was finished in 2011, was put in production in 2014, and stopped in 2016. So about $400 million have been already spent in the project, which is great. So we're picking it up from there with our team. And as you can see from this chart, so the project was advanced up to 46%. all the engineering had been done with FLS Schmidt from the US. Most of the procurement was also done with FLS. So all the long lead items have been ordered, which is great in the time of mining boom that we're going to foresee now with higher prices and very good contractors. So this is almost done. What is left to be done is really the construction, and we are reappointing an EPCM and construction party, which will basically complete the project. We're talking about $600 million of capex going forward, and we are busy finalizing the debt package, and still interested to see whether any other equity investors would want to pitch for their proposal. On the next slide, you will see if you've understood nothing of my presentation because of my broken English, we put a few pictures which will show you where we are. So this is the foundations of basically the processing plant, which has been well advanced. On the next slide, you'll see the comminution circuit. Maybe on the next slide, yeah. On the next slide, maybe. Yeah, that's right. So very straightforward process. I didn't mention the fact that it's a full sulfide ore body with a very thin oxide ore. So we'll have a very straightforward processing process. On the next slide, also you'll see, stockpile. On the back of it, you have this warehouse which have been erected. So all of this is in place. And the final slide will show you, the fact that we are already connected to the grid. So as I said initially, we are benefiting from all the infrastructure from Oyu-Tolgoi, and this is a good case of it. So we are connected to the power line and substations at Oyu-Tolgoi, so which itself is linked to the Chinese and Russian grids. So we are all geared from that perspective. And as you can see, it's fairly arid over there, but we have access to more than enough water to get the project going. The project is fully permitted. We are about 24 months from commissioning, and I think you will see very, very few copper projects of this size and that close to production, which are ready to go. So if you have any questions, I'd be more than happy to answer.
Great stuff. Well, thank you. We've got a question here from George Petra. He's been asking quite a few questions. We haven't been able to get to them all, but the question here is about offtake agreements, one of them anyway. Do you have anything organized at the moment in terms of royalties, streams, offtakes, that kind of thing?
So yes, indeed. So as part of the debt package, we're negotiating with some private funds, banks, and also streamers. So we've received quite a few offers in terms of stream funding, given that we will have a gold and silver as part of our concentrate. That's one thing we're considering. In terms of pure copper offtake, I'm extra figure. So we're having good discussions with my former employer, but we are very open to others. Avalon Mining will have exclusivity also for 60% of the production, and we are in discussion with various offtakers for the copper.
Thank you. And I think I'm going to come back to Alberto. You guys know each other, so I think Alberto can perhaps add a bit of colour to that and some observations and questions.
Well, I have to say thanks for that, Pierre-Yves and Simon. Look, great project. Look, I've been a big fan of Mongolia for a long time. There's three countries in Asia Pac that I like a lot from a resources point of view. It's Mongolia, Indonesia, and Australia, and that's mainly because the geology. The legal risks and regulatory risks are all different in each, but in terms of the geology of Mongolia and Indonesia and Australia are like second to none in the whole region. So you're definitely in the right area geologically, and it's good to hear that that's on the, ultimately your offtake will probably be the Chinese who need copper, and you're in the right space in terms of metals, because copper is considered one of the big metals of the future. The whole EV play. Look, I reckon Pierre-Yves would be a good candidate for a future SPAC one day, so we probably should talk about that. But
you got the money, Alberto.
Yeah, that's it. It's the only time Pierre-Yves calls me when he needs money. But look, it's good. It's good to see that project's getting up and running, and I hopefully, someone like Pierre-Yves who's been in Asia for a long time and has got good backing from a lot of people, should hopefully make that work. So I'm happy to hear that project. So yeah, good. We'll take this offline, but yeah, I like the project.
Great, thanks, Alberto. Daniel, do you have any thoughts on this one?
Yeah, just I mean, just giving you a position on the cost curve and the ease of mining over there, it seems like you could almost kick the dirt and you're going to find copper. But just in terms of your workforce over there, how do you, what are your thoughts on assembling a workforce of, it's obviously going to be a fairly large scale. How do you actually get enough people and skilled people in that part of the world to undertake a project like that?
Well, Oyu Tolgoi is a $10 billion project, so we're microscopic compared to them. Fortunately, in Mongolia, you have copper projects which have been existing. Erdenet, for instance, has been there since the 70s. We're about half of the size of Erdenet. So I think in terms of hiring local staff, I don't think we'll have a problem. I must say most of our team at the moment are expats from Australia, South Africa, and so on and so forth. But I think we'll have no trouble finding local support as well. In terms of construction, I think it'll be a big endeavor. And we are talking to mostly Chinese contractors, which will bring their capabilities just right across the border to help us complete the project. So it is a very fair question, but I think we're capable of addressing it. And Mongolia has shown that they were able to build that kind of size of projects.
Yeah, great.
Thanks. Daniel, you'll find most geologists would love to go to Mongolia as long as it's not during the winter months.
Yeah. It gets pretty cold. Yeah.
As you can see, I'm still wearing a double layer, even though we're in June, right? So it's not that warm yet.
Brilliant stuff. Well, again, Pierre-Yves is also on our Minds of Money Online Connect conference. He's taking meetings between the 22nd and the 24th of June online. So you can find him there for some of the more in-depth and detailed conversations that some of you may wish to have. This has been great, guys. Thank you so much, everybody, for their input. We try and keep this to 40 minutes. We've overrun a little bit, but that's because we were enjoying ourselves so much. Thank you to Daniel Porter, to Alberto Migliucci. Also, thank you, guys, to our sponsors, to WA Kaolin, Kin Mining, and to Avalon Mining. We'll see you next time. These happen every Thursday in various different time zones. It's always 5 o'clock somewhere. If you want to have a drink with us, please feel free. And for those of you, good luck with your mines. And for those of you investing, good luck with your money, and all the best. Thank you.
Thank you.
Thank you very much. Thank
Thank you
you.
all.
Bye-bye.
Bye-bye, Simon.